Hello everyone, welcome to the Fintech Friday series on the Sound of Accra podcast, where we unpack economic topics and affairs across the African continent. I'm your host, Adrian Daniels. This special series on Fintech Friday is the 9th of a 12-part series where we explore blockchain technology and cryptocurrency in a lot more detail. Special thanks to our sponsors, Binance Africa. Binance is the world's leading blockchain, ecosystem, and cryptocurrency infrastructure provider with a financial product suite that includes the largest digital asset exchange by volume. Trusted by millions worldwide, the Binance platform is dedicated to increasing the freedom of money for users and features an unmatched portfolio of crypto products and offerings, including trading and finance, education, data and research, social good, investment and incubation, decentralization, and infrastructure solutions and more. For more information, visit www.binance.com. For more information, disclaimers, risk warnings, and links, please check the podcast description section below. In today's episode, we will explore cryptocurrency regulations in Africa in terms of countries, the overall landscape, what restrictions governments are placing on what sort of things investors, founders, and entrepreneurs who want to utilize the blockchain and cryptocurrencies for various use cases, as we already explained in this series, such as financial inclusion and agriculture, may want to consider before pursuing these projects. Now, references used for today's episode will all be found in the podcast player description section below. Now, let's get straight into it. Now, the regulations that exist regarding cryptocurrency in Africa vary from country to country, with things such as central bank digital currencies like CBDCs. There's still quite a large amount of differentiation between countries in terms of how they see the importance of the blockchain and cryptocurrency. Also, in terms of how valuable this is seen by governments, this also varies from country to country, in addition to the levels of compliance and regulation that have been put in place for each African country, especially as these Web3 technologies are still in their infancy in Africa and in general all over the world. Now, it seems it's going to take some time for the whole of Africa to be on the same page with these type of technologies. Binance has been quite key in shaping the landscape of crypto in Africa, I must admit. Now, in August 2024, they launched a one-click buy and sell feature in Ghana, Tanzania, Uganda, and Zambia, allowing users to trade Bitcoin and Ethereum through mobile money accounts. Now, in addition, Binance activities have also prompted African governments to develop and refine their regulatory approaches to cryptocurrencies. Let's look at some of these country-specific regulations. Now, countries such as Egypt and Kenya seem more strict when it comes to regulations. For instance, the Central Bank of Kenya, that's the CBK, has various warnings against crypto centered around fraud and anti-money laundering. Now, nevertheless, there are no restrictions on cryptocurrencies at the moment, and the government has even seen use cases for which the blockchain will be useful to improve various industries in the nation, such as purchasing of property and land. Where Kenya is more loose in some areas, Egypt is totally strict and does not allow the use of cryptos without licensing. But interestingly enough, this isn't stopping the nation from showing interest in the blockchain for things like finance for trading. On the other hand, countries like Ghana are far more relaxed in this area, and as explored in previous episodes, the government has even embraced the technology and are working on making it the heart of their operations as they want to become Africa's first blockchain-powered government. Now, in Ghana, there's currently no regulations for crypto. Whilst this is a good thing, this could also be a bad thing, in the sense of there's no protection for investors and consumers that use it. You've got countries like South Africa who seem to be in between these two countries and actually have defined regulatory framework for crypto, overseen by the Financial Sector Conduct Authority, that's the FSCA. Now, the country's central bank even has conducted a wide number of test projects where they're exploring the use cases of the blockchain. Now, in terms of areas like CBDCs, the Bank of Ghana has been working on digital currency projects, the eCity, as part of a larger digital financial transformation plan. The South African Reserve Bank, that's the SARB, has reportedly currently been testing out CBDCs. And then you also have the Reserve Bank of Zimbabwe, that's the RBZ, and they have doubts about crypto. But however, they are still doing a deep dive into what impact century bank digital currencies could make on the nation. CBDCs are seen as a way to make the financial system more contemporary, and they also provide a more centralized and a digital alternative to fiat currency that we both know and use. And this will certainly pose a threat to cryptocurrency. Now, if you look in terms of regulatory themes, there really isn't any consumer protection out there apart from countries like South Africa, who've made a huge step forward in putting into effect consumer protection in place, with crypto being declared a financial product in the country officially from October 2022. More and more African countries like South Africa are also looking at enforcing more regulatory themes such as anti-money laundering and counter-terrorist financing, as they are more developed countries. Now, on the other hand, tax policies are also becoming a topic of discussion for such countries, as you have to consider things like what happens when people are profiting from cryptocurrency as an investment or an income. Do they pay tax to the government? In other words, do they pay capital gains tax? Now, it's clear that approaches to regulations vary from country to country in Africa, and you can see there are stances that vary right across the scale, from absolute bans to large endorsements of the technology. Now, everything discussed in today's episode is not set in stone, and as Web3 demand grows and the technology increases in improvement and adoption, we will see these regulations change along this evolution. African countries who currently are quite relaxed with restrictions will need to buckle up a bit, and those that are quite strict will need to reassess if this is hindering the economic and innovative landscape. Thanks again for listening to today's episode. Once again, for more information on Binance and the disclaimers, risk warnings, and links, please check the podcast description section below. You'll also find references from today's episode. See you in the next one. Bye-bye.